Hi, my name's Lee Hopperton. I'm the Chief Investment Officer for Future Generation, and I am joined today by Will Lowe. Will joins us from Amova, which is branded the Yarra Global Share Fund in Australia. That's been in the Future Generation global portfolio since the very start. Will's based in Edinburgh and is down here for a short trip, so we're super grateful that Will's made time for us. Will, do you mind by starting with your process? I know you're looking for sort of future quality and growth. Can you talk about the pillars of success that you're looking for?
There's clearly many paths to delivering returns, but we're really clear the path we're on. Strong believers that actually owning companies that can grow, attain and sustain high returns on invested capital. That power of compounding is really important. And you add in some kind of quality filters as well, or pillars, where you want to really be confident, a great franchise, great management team, strong balance sheet, and more importantly, you're paying a sensible or indeed attractive price that does not already discount all that future growth.
And I understand from previous chats we've had that there's a team around you who are helping come up with the ideas. And how does that work? How important is it having a stable team around you?
Well, I think a team is really important. In reality, the global opportunity set is very large. So suggesting that one person can come up with all the ideas, I think is really remiss. Most people have a few great ideas each year. But if you've got a great team environment with a range of very smart investment professionals, researching and finding those ideas, debating, iterating, and therefore building portfolios. When you get it right, a team is certainly much more powerful than the individual and indeed more consistent over time.
And with that process and your team behind you, the market's been obviously very concentrated around the AI theme, winners and losers and so on, a lot of momentum in that space. How's the process dealt with that kind of market?
Well, I think momentum in part can be good. In reality, what really drives share prices in the long term is profits. And companies deliver much better growth and deliver those returns consistently, tend to outperform, and you own those, typically you'll have a bit of momentum. So there's nothing wrong with momentum, but more recently, the momentum is very skewed, and in some areas of the market I would describe as quite extreme, indeed flagging up some severe warning signs that significantly kind of overbought in somewhat bubble territory. So I think momentum in lower quality, higher beta, speculative and more retail-dominated firms, that environment can be a bit more challenging. But what we know from history, they don't tend to last. As much as these periods can be painful in the short term, reality eventually comes back.
So does it remind you? I mean, this isn't your first rodeo in a sort of environment like this.
Thanks for highlighting that.
Does this remind you of any periods in history that you could sort of rhyming with that kind of sort of narrow momentum in a few stocks?
I think there's two things. I think what does rhyme is periodically as you go through markets and when investors position collectively towards one very specific environment. And previously it was around about a low growth world, deflationary, and owning much more high quality and much more defensive firms. Clearly we've got more of an economic cycle today, capex led, and that's led to investors reorientating away from defensive and paying quality for premium effectively to embracing cyclicality. And that adjustment and rotation phase is what we've just been through. That's got strong parallels to what we've seen in the past. And I would suggest the early 2000s was a very good example post the TMT bubble around about the 02 period. So we've seen this rodeo before. But once it's done, and once people have kind of adjusted the extremes of valuation and everything becomes core again, it comes back to, are you in the right companies, delivering growth and profitability? So that kind of adjustment phase, it does happen and probably has already happened would be our suggestion.
And I know you've flown in from Japan in the last couple of days. Are there areas in the world or industries that you're seeing opportunities present themselves as a result of that market dynamic?
I think one of the things we're realising, we can talk a bit about AI of course, but clearly we're in a world where the growth driver is different from the past. We're not in a consumption or debt-fueled growth in terms of households. It's all about capex. AI obviously being the biggest part of that. But really therefore finding companies that are more physical rather than digital and less likely to be disrupted by AI, and also benefiting from the kind of the tailwinds from a revenue and spending and where the growth is in the economy. That leads us more towards capital goods companies. And we find them in a range of areas. For example, in Europe, we own Sandvik or Epiroc, or in Japan, more recently, we've been adding SMC and K-ONS. There's lots of ways of playing that capital goods cycle, but still by owning high quality, high return on capital firms that meet our philosophy.
And is the market still ignoring a lot of those areas? Do you feel the market's still, not quite picking up the opportunities that are being presented elsewhere, or are we in a transitory phase where there's a rotation going on?
I would suggest the market's quite bifurcated. You're either in AI directly or related to that spending cycle, and everything else is lagging.
Yeah.
This is not a universal bull market. If you look at the underlying price trends in many firms, they're being ignored. At some stage, there'll be a reappraisal as people reallocate back from some of the global equity side, from some of the AI related. So I would suggest there's lots of long-term opportunities out there, companies being ignored.
Is it too hard to ask you for what the catalyst might be that might see that sort of change in attention?
Well, there's a range of potential catalysts out there. One of them would be obviously the spending cycle is going to be drawing large amounts of capital. That ultimately is funded, and that could mean more money that's going into the real world, into physical goods, whether it's in data centers or otherwise, rather than liquidity floating around the financial system. So broader, the more money that gets spent, the more we may see a gradual tightening of policy. And if you add in the other thing that's dominating, probably in the coming months, is the IPO cycle. Yeah. There are a few very large IPOs coming, of which one might be related to space, demanding very large amounts of capital, which again may change the liquidity environment as the public markets start actually see some equity supply for the first time.
And with the AI, with the run in AI stocks that we've seen, how has your exposure been characterised with those? Have you seen opportunities and sort of taken that ride through, or has it been too sort of narrow and momentum driven?
Well, I think what we're seeing is what we want to own. We've been believers in the AI, but we own the franchise leaders, the NVIDIAs, the Broadcoms, and the ASMIs we own in the semiconductor equipment space. Franchise leaders, high market share, dominating. I think more recently the scale of CapEx surprise has been so large, it's created a perfect short-term environment where some typically lower quality, more cyclical firms historically are doing much better for a period. So it's a bit of a sugar rush in terms of perfect kind of revenue and pricing and profitability that typically doesn't always last. So that area is probably where we've been less exposed to, but I think that's the area that looks most overbought to us. Okay. And actually at some stage we think we'll have a bit of a reality check.
And if the market's all focused in that area, is there a stock that you would identify as being, or a particular area that you think is really interesting at the moment and most excited by, but possibly others are not paying attention to? Well,
I mentioned some of the capital goods, but there's also a range of areas that are being ignored. I think investors are so focused on the here and now. Basically, I think the duration in terms of what people are focused on, in many cases, is quite short and is all AI related. And that means sometimes some long-term cycles and companies, particularly that are growing market share in areas such as insurance, where we believe some names we own the portfolio, such as Palomar, which is structural growing market share in the insurance industry in the United States, is being ignored because the short cycle in terms of pricing of insurance is down, but the long-term driver of that business is growing market share. So I think there's lots of interesting companies. Actually, now's the time to own those, because eventually when people get past AI, focus on the real compounders, they'll get reappraised and hopefully in a good way.
Yeah, that's exciting. Opportunities emerging. And you very generously managed money, as I said at the start, for Future Generation Global for a really long period of time. And it's because you're not charging us fees that we've been able to give $100 million so far away. Could you explain why you do that? We're grateful, but what the motivation is.
I think it's important to give back. I think we're in a very privileged industry, so we've got the opportunity and ways a firm in terms of giving back is important. And if it's going back to a very well managed and well focused charity, focused things that we would stand behind, perfect example for us doing it. So it's a great way enabling the type of things we want to do as a firm.
That's super nice to hear, and we're very grateful for the effort that you make for us. And we're grateful that you've made time in a flying visit a couple of days in Australia to come and chat with us and our shareholders. So thank you very much for that. If you want more information about Will, his firm, or Future Generation Global, there's plenty more on our website, or we'd love to speak to you, so please feel free to pick up the phone and give us a call. Thank you.
Thank you, and delighted to be here.
Thanks, Will.